Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is, what is today? 6:22, 5 a.m. Eastern Standard Time. Let's get to it. A bit of weakness on gold this morning. Not too much. We had a nice rebound yesterday. Late last week was a horrible week for gold. We are long of the gold stocks, and what we did yesterday was we sold a bunch of covered calls to help hedge that position. What I will share is that we're entering, as we proceed into July, a seasonally favorable period of time, at least for the gold stocks, and we should see July and August act, again, pretty favorably. So I think the worst is over for gold. No new weekly lows yet. One of the gold stocks that we do own, GDXJ, that did put it in a new weekly low, but it did rebound to close up on the day. NUGT, which is a leveraged ETF, putting you long of the large cap gold miners. No new weekly low there. That's where we sold the covered calls, because we sold those covered calls on strength as implied volatility expanded. So more to come, as we'll probably be looking to sell more covered calls to hedge our positions, given the fact that we are entering, again, a seasonally favorable period of time. Once we get out of June, we'll look to sell covered calls on strength and try to get as far away from the money as possible. And ideally, we're selling those covered calls on an up day, ideally a gap up. Expanded implied volatility, you get paid more, you get further away from your strike, but you're generating cash flow. So that's the game plan. We discussed that with members last night. Now, gold is coming off the lows of the session somewhat, but we know that gold, it all hinges on, for the most part, one thing, and that's the U.S. dollar, right? So the U.S. dollar is up this morning. But you can see here on this 15-minute chart that we just may be putting in a head and shoulders setup. I have an alert set down here for when it fires off. That alert comes to the phone. No need to sit in front of your computer all day long. So we're watching for a break here, and if we do break to new daily lower lows, you'll probably see gold move to new daily highs. What might prevent gold from moving up higher? A rising yield, but I think as traders come to realize that inflation is here, it's probably not going anywhere, and the Federal Reserve, they may be talking tough, but they have nothing there. There's nothing there. So they're not raising rates anytime soon. So gold could shrug off yields just as it did back in the 1970s, early 80s, when it rallied along with yields as Paul Volcker tried to crush inflation. So as we enter this new stagflationary environment, gold should do very, very well. Let's take a look at silver, and then we'll segue over and into equities. Then we'll talk about some economic data, and then we'll do some chart requests. I had to reboot, so I don't have my symbols all lined up here, so I apologize. Always happens right before I go live. I have to reboot. Too many windows open. Silver, not a great day yesterday, but I think what you're setting up for here, this is a 15-minute chart, so a very shallow view of the market. Possible head and shoulder, inverted head and shoulders setup. Here's your left shoulder, head, right shoulder, and here's your neckline. You could argue that we busted out of it and then failed. Let's do this. Let's put it here. There we go. So we're looking for a breakout on silver. We are long of silver. We love to generate cash flow off of our position, but we want to wait for strength. We want to sell into strength. Again, take advantage of the implied volatility widening out. Let's take a look at a 4-hour chart. Nice consolidation here, no breakout. So silver looking good. This is what, yesterday? 621, yes. This is Friday. It's actually Thursday, right? 617. Yes. So we do have a new weekly low on silver, and that matters, right? It's like you set precedents, right? So we did make a foray down into the lower lows of last week, and ideally you don't see that. Hey, Sam, how you doing, buddy? How's everything over in Italy with COVID? Is it all back to normal there? I hope. Fingers crossed. Natural gas. I promised I would go to equities, but I lied. I wanted to take a look at natural gas. We've broken out here, 4-hour time frame. We're bullish on natural gas. Very, very bullish. We may be reopening a trade here. We booked profits on an options trade last week. Actually, was it last week or the week before? I think it may have been the week before. We sold naked puts on BOIL, B-O-I-L. This is a leveraged ETF. Can't spell this morning. And we sold the naked puts. We booked profits there. Moved to the sidelines. Now we're looking to re-enter. I believe it was the 25 strike we sold. So BOIL looking good. Before we move over to equities, let's finish off here with, I want to take a quick peek at ag. Not much going on. Let's finish off with oil. We'll go with light sweet, as we always do, to stay consistent. Light sweet had a very good day yesterday. We had a continuation move up overnight, but unable to hold it. We flashed a reversal bar this 4-hour time frame. Now this new 4-hour bar, which opened up at 5 a.m. Eastern Standard Time only a few minutes ago, we have a new lower low getting put in. So beware. Beware of energy stocks here, because energy stocks trade in tandem with oil like 90% of the time. So if you ever do a correlation on your charts of oil and energy stocks, huge correlation. So beware here. I like energy stocks. Great day yesterday. You may get a pullback, though. Now let's go to equities. Let's go back to Sam here. Everything is going back to normal. Good, buddy. I know, speaking to you a year ago, it was a nightmare for you. They're printing euros like crazy, too. I think that's really the only reason why you're not seeing the dollar crash, is that the euro, which is the largest, for those not familiar, I know Sam is, the euro, which is the largest component of the basket of currencies, the Dixie, that trades against the U.S. dollar, if they ever let that rise organically and stop printed euros, the dollar would just go. Gotcha. All right, Sam, good to hear everything's better. All right, let's take a look at equity prices. We'll go with the S&P 500 first. A little bit of weakness here, not much. We're down slightly. This last 4-hour bar here was very bearish. No new 4-hour low yet. So let's memorialize this. A lot of energy stocks in the S&P 500. At or below. And we are good to go. Oh, but folks, can I ask you to smash that like button, please? Share with a friend. Subscribe to the channel. And happy belated Father's Day to everybody. Hope everybody had a good one. Come on. Now, the small caps, of which we are short, had a very good day yesterday. They were up over 2%. This last 4-hour bar, weak. No continuation breakdown this bar. We remain in a long-term trading range here. You know, in fact, we had broken out of this trading range. I deleted all my old annotations. It was just getting way too busy. And we had broken out last week above resistance right here. And ultimately, we failed to hold that breakout point. So normally when this happens, when you get a breakout and then a rollover, you'll retrace all the way back down to your historical support level, which is all the way down here at around 2100. We are bouncing off the lows of the session, but still down over a 0.25 percentage point. And if you see yields rise, the small caps have been trading well with rising yields. As you saw yesterday, rising yields, small caps did well. Oddly enough, technology did well. They normally don't do well in a rising interest rate environment. Qs did well. They normally don't do well in a rising interest rate environment. Is that a trend? We don't know. One day doesn't make a trend. So let's check out first yields. Actually, it's not the yield. It's the 10-year Treasury note, and inversely trades the yield. So we are down on the session, which means that yields are again up. Now, we had broken out last week. I believe this is Friday. It's actually the 20th, which is Sunday night. And we rolled over and broke back down. Here's your breakout. This was Friday here, this bar. We broke out, topped out on Sunday, crashed going into Monday, sending yields up higher. But the market shrugged it off. Now let's take a look at how the Nasdaq 100 is behaving. Again, folks, I'm sorry for not having these quotes in order as I normally do, but I had to reboot prior to going live. So the Nasdaq 100, oddly enough, you had a really nice inverted head and shoulders setup, right? Really nice. Here's your left shoulder. Here's your head. Here's your right shoulder. We broke out. Here's your neckline here in green. Now, though, after pushing higher, we've rolled over. And we have now broken back down. This last 4-hour bar closed. Let's rephrase, okay? We don't want to be hyperbolic. And when I say a breakdown, that's hyperbolic if I'm inaccurate. Let's just say we closed at support. And the reason why I'm correcting myself is I have a short position on the Qs, so I don't want to be hyperbolic. We don't want to speak our book. We closed at support this last 4-hour bar. This bar we broke down. No new 4-hour low. We'll just make a note to see whether or not we get that new 4-hour low. Because generally the Qs don't do well at these levels on the Treasury yield if yields press up higher. So if yields press up higher, don't be a bit surprised to get a continuation breakdown on the 10-year Treasury yield. We did oil. What's Bitcoin doing? Bitcoin had a rough day of it yesterday, man. Wow, we're down another 3.5% this morning. And we're nearing my price target of 28.8. Let's get rid of all of this stuff. I got to clean up these charts. In my mind, I know exactly what one of these lines represents, but I know that people that are just signing on, they're looking at my chart saying, this guy must be a madman. There's no way he can make out what's on this chart. It looks like spaghetti. So I'm gonna reset all of these. All right, we'll start fresh. All right. So what are we talking about with regards to a head and shoulders setup? Here you have it. Here's your neckline. Usually I'm going backwards right now. Here's your neckline. We'll make that in red. Over here is your left shoulder. Here's your big fat head. Here's your right shoulder. It looks like we're going to break. Now, I've had a price target. I made fun about this. When we first started breaking down, I had a price target of 28.8. I think I may have to lower that price target. I think it may have to lower it. So let's create an alert here. Okay. And we're good to go. Alerts are set. Now, one thing to keep in mind is that in recent times, I've done a lot of analysis on this, is that in recent times, you've had Bitcoin trade in tandem over a long period of time, trade along in tandem with the CPI, the Consumer Price Index. That hasn't been the case these past couple of months, where we've seen hot CPI yet Bitcoin roll over. I know Peter Schiff's been all over this, saying that Bitcoin is a fraud. It's going to zero. You know, listen, I just look at the charts. Right? I couldn't tell you. I don't know what a Bitcoin is. No clue. No clue. I know it's blockchain, it's a technology. It just seems like there is an infinite number of these blockchains, and I can't speak intelligently about them. What I will talk about is the chart. So I don't want to get into an argument about Bitcoin's for real, Bitcoin's a fraud. I don't know. I don't know. That's as honest I could be. So looking at this chart, it looks as though we're going to press lower. I don't like the breakdown from that historical correlation between CPI rising and Bitcoin rising. That's broken down. We'll have another test on Friday when the PCE comes out. Friday. It's an inflation indicator. The Federal Reserve uses it. Let's see whether or not, if that comes out hot, do we get a rebound in Bitcoin? If we break down on a hot PCE report, look out below, because I don't know the correlations anymore because they've broken down. So it's important to know your correlations. Once they break down, normally there's a reversion to the historical correlation, but in the short term anyway, that correlation is broken down. So I would say avoid Bitcoin. Watch for a break here on this head and shoulders setup. It's not a guarantee. I'm not forecasting a guarantee. Many times head and shoulders setups get negated and you move up higher because they lure suckers in. So I would not short hoping that we break support. Hope is not a strategy. You want to short into weakness and a break. Sam, you like me with the lines? Yeah, it's crazy. It gets out of control. What's protein doing? Cattle was doing really good. I think it was yesterday, right? Yesterday? No, it was last week, and it rolled over. What else do we have? What's the Dow doing? Wrong chart, Bob. Dow down slightly. All right. None of my alerts are fired off so far. Let's take a look at some eco data coming out. A bunch of Fed heads coming out. All playing good cop, bad cop. Don't listen to what the Federal Reserve says. Watch what they do. Don't listen to what they say. Watch what they do. A lot of traders got lured into dumping gold and silver last week. I think that was a big mistake. We were buying on Friday. We were buying the dip because people got afraid that the Federal Reserve was going to raise rates a year and a half, 2 years from now. What's up with that? It's crazy. They're going to continue. They admit they're going to continue buying debt, building up their balance sheet, weakening the U.S. dollar. Yet people are selling gold and silver because they're going to possibly talk about raising rates a year and a half from now? Give me a break. So today, not too much coming out. Existing home sales. Powell's going to testify on coronavirus. I don't know what that's about. Next, he's going to testify on climate change. Wednesday, we have the manufacturing PMI coming out. But on Thursdays, when things get real, and even going into Friday, when we get initial jobless claims on Thursday. Remember last week, they expected 360,000. They got over 400,000 initial jobless claims. So this economy continues to bleed jobs. Durable goods. That's coming out on Thursday. The GDP revision. That's coming out on Thursday. God forbid that pulls back. If you want to see the Buffett indicator move up higher, which is strongly overvalued, it's a valuation of the stock market. If you see a pullback on GDP revision, watch that spike up higher to even more overvalued. Friday, core PCE price index. That's your inflation index. And that's very important because the Federal Reserve uses it. We also have personal income and consumer spending. Personal income is expected to drop yet again. With inflation rising, personal income's declining. I mean, horrific. And people are spending on credit cards again. Personal income is expected to decline yet again, with consumer spending up. How are they doing that? Credit cards, more debt, more debt. Let's move on over to some chart requests. I want to follow up on Boeing. Boeing had a great day yesterday. Here's the weekly chart. A beautiful recapture, assuming that we close here. A beautiful recapture of 240 spot 27. The daily chart, I already have an alert set up here. We're watching for a pullback and a retest of around that 240.37 mark, give or take a dime. I have some sensitivity on here. By the way, we're using TrendSpider, automated technical analysis, 35% discount code below, scanners, automated trend lines. Watch this. You want to know where resistance is? Click a button. Bam. If you buy here, expect resistance up here in green. 253.16. Again, I'm going to take it off. Put it back on. If we break through 252.16, we could quite possibly head up here to this rising upper band of resistance. So Boeing looking very strong. The banks had a very good day yesterday. This is a weekly chart we're going to begin with. We're back above a few rising support levels, moving averages. You need rising yields. This morning, yields are rising, good for the banks. And what I want to point out here, this is also with TrendSpider. July is the equivalent to October being the best month out of the year, up 82% of the times, going back 12 years. So seasonality is very favorable. So what we need to pay attention to, what this chart is telling us, is that in all probability, July is going to be a good month Why would it be a good month for the banks? It's probably because yields are generally up in July and in October. What does that mean for tech stocks? Know your correlations. Let's take a quick peek at the TrendSpider because we have a short position here. I want to validate if my assumption is accurate. We'll come back to the FAS. FAS is a leveraged ETF putting you long in the banks. If you don't want the volatility, use XLF. Here are the TrendSpider. And over the past 12 years, no, there's no correlation here. Over the past 12 years, it's up 100% of the time. So they trade in tandem with the banks. So I expected a down month, but this is the value of having TrendSpider. Again, 35% discount code below. So we're proceeding into a very strong month over the past 12 years, triple Qs. Let's go to the TLT out of curiosity. This is a 20-year bond ETF. July is up 64% of the time. That's why you see strength in tech. Mixed signals there. All right, let's go back to the FAS. Wrap up with that before I went off into my maniacal tirade. Weekly chart. Good inside week thus far. No new weekly low. It's the first thing we look at. Do we have a new weekly low? Check that box. We do not. Daily chart. We bounced off of. These are my drawings here. We bounced off of my support levels that I drew. We had closed down below it on Friday, recaptured it yesterday to be more accurate. And when we throw our automated trend lines up, we have resistance up here at 110.43 per share. So assuming that yields continue up higher, let's check out bonds yet again. Yields are, for all intents and purposes, flat right now with a bias to the upside. I think we're going to put in higher lows and break out again. So that being our assumption, if we're accurate, that means the banks should press up higher again. Where is resistance? Right here in red. Click of a button. All right, DraftKings. Not loving this. I want to go to PLTR in a moment. I made a call on that the other day. I was accurate, but then it rebounded. So I want to recheck and see how it closed yesterday. We had broken down below critical support last week. So far this week, an inside week, favorable, good to see. First rule of buying a stock that's under pressure, you want to see it stop going down. So far, no new weekly low. Might we be putting up a new higher low? Quite possibly. What I want to do is create an alert here. See if we get a continuation move lower, yet still have a stock that has not put in a new weekly low yet. It's putting in a new higher low, and it's bouncing off a support level and making it eligible to be bought. I'm not ready quite yet because we haven't recaptured support. We're at resistance levels. We'll keep it active for a couple of weeks. We may just slosh around in this triangle formation for a few days. So our alert's set. This one's expired. Let's get rid of this. No need to reset that. I also want to know if we break out above resistance. No sensitivity. I care about only a close above resistance. long entry or add to an existing position. Again, we'll keep it active for 10 days, and we're good to go. So DraftKings remains a watch. It looks better than what it did on Sunday night when I last looked at it. Daily chart. We have another resistance level here. Well, I want to make a note to myself that I have a weekly and alert. Okay, so we have a note to ourselves reminding us that we have resistance immediately above where we have an alert set. So would I be a buyer on this daily breakout? Probably not. Way too close to weekly resistance, but it puts it at the top of our list of a stock to watch because it's behaving well. We're putting in higher lows. Now we're beginning to break out through resistance. Now it becomes worthy of our investment dollar. So with that, folks, I'm going to say everybody have a very profitable trading day. And thanks for joining in. Smash that like button. TrendSpider 35% discount code. Join the Contrarian Trader, my newsletter. You get TrendSpider for free on the silver and gold level memberships. And until tomorrow, again, everybody have a profitable trading day. Stay safe. Be well. Take care.